Did you know that a single metal has the power to shape entire economies and influence global politics? We're uncovering the hidden role of gold in financial history. Beyond its glittering allure, gold has been a silent yet powerful force, shaping everything from ancient trade routes to modern financial systems. Stick around as we reveal the true value of gold and its impact on our world throughout history. The ancient allure of gold. Gold's journey begins in ancient civilizations. The earliest known gold artifacts date back to around 4500 BC, found in the Varna necropolis in Bulgaria. This precious metal was cherished by ancient Egyptians, Sumerians, and Greeks, not just for its beauty, but for its supposed divine connections. The Egyptian pharaohs believed gold was the flesh of the gods, and it played a crucial role in their afterlife rituals. One of the earliest recorded uses of gold as money was in Lydia, an ancient kingdom in modern-day Turkey, around 600 BC. The Lydians were among the first to coin gold, setting a precedent for future civilizations. This established gold as a symbol of wealth and a medium of exchange, a tradition that would continue for millennia. The gold standard and economic stability. Fast forward to the 19th century, and gold's influence on the financial world became even more pronounced with the establishment of the gold standard. The gold standard was a monetary system where a country's currency had a value directly linked to gold. Countries adopted this system to ensure economic stability and international trade. The United Kingdom was the first to officially adopt the gold standard in 1821. This move inspired other major economies, leading to an international gold standard by the end of the 19th century. The gold standard provided a fixed exchange rate system, reducing the risk of currency fluctuations and fostering international trade. It also limited inflation, as the money supply could only grow with an increase in gold reserves. However, the gold standard was not without its flaws. The reliance on gold reserves meant that economies could be constrained by the availability of gold, leading to deflation and economic stagnation. The Great Depression of the 1930s highlighted these weaknesses, as countries struggled to maintain gold reserves while facing economic collapse. The Bretton Woods system. In 1944, as World War II was coming to an end, the Bretton Woods Conference established a new international monetary system. The Bretton Woods system pegged the US dollar to gold at $35 per ounce, while other currencies were pegged to the US dollar. This effectively made the US dollar the world's primary reserve currency. The Bretton Woods system brought stability and growth to the post-war global economy. However, by the late 1960s, the system began to falter. The US faced mounting inflation and trade deficits, and other countries started losing confidence in the dollar's convertibility to gold. In 1971, President Richard Nixon suspended the dollar's convertibility into gold, effectively ending the Bretton Woods system and ushering in the era of fiat currencies. Did you know that the Bretton Woods Conference in 1944 wasn't just about economics? It was a visionary attempt to create a new world order after the devastation of World War II. Among the prominent figures was John Maynard Keynes, a British economist whose ideas shaped modern macroeconomics. Keynes proposed a global currency called the Bancor, which would be used in international trade instead of gold or national currencies. Although this idea didn't materialize, it showcased the bold thinking aimed at achieving long-term global economic stability. This conference also led to the creation of the International Monetary Fund (IMF) and the World Bank, institutions that continue to play crucial roles in the global economy. Gold in modern financial systems. Despite the end of the gold standard, gold has not lost its allure. Central banks around the world still hold significant gold reserves as a hedge against economic instability and inflation. In fact, central banks have been net buyers of gold in recent years, highlighting its continued importance in the global financial system. Gold also plays a critical role in investment portfolios. Known as a safe haven asset, gold tends to perform well during times of economic uncertainty and market volatility. For instance, during the 2008 financial crisis, gold prices soared as investors sought refuge from the collapsing financial markets. Similarly, in 2020, as the COVID-19 pandemic wreaked havoc on global economies, gold prices hit record highs. Companies like Paxos have created digital tokens backed by physical gold, allowing investors to trade gold securely and efficiently through blockchain technology. This innovation combines the traditional value of gold with the cutting-edge technology of cryptocurrencies, offering a seamless and modern way to invest in gold. Moreover, gold-backed ETFs, exchange-traded funds, have democratized access to gold investments, allowing individuals to invest in gold without the need to physically store it. These ETFs are traded on major stock exchanges, making gold more accessible and liquid than ever before. Gold's impact on geopolitics. Gold's influence extends beyond economics into the realm of geopolitics. Countries with substantial gold reserves often wield significant power on the global stage. For example, Russia and China have been increasing their gold reserves, challenging the dominance of the US dollar in international trade. In addition, gold has been at the center of numerous historical conflicts and power struggles. The California gold rush of 1848 to 1855 attracted hundreds of thousands of people to the western United States, drastically altering the country's demographic and economic landscape. Similarly, the discovery of gold in South Africa in the late 19th century led to the Boer Wars, as the British Empire sought to control the lucrative gold mines. While gold is often stored in heavily guarded vaults, some countries have gone to extraordinary lengths to protect their reserves. For instance, during World War II, Norway evacuated its entire gold reserves to avoid them falling into Nazi hands. The gold was transported in a daring operation involving trains, fishing boats, and even hiding in caves. This operation was critical in maintaining Norway's financial sovereignty during the war. Additionally, there's the fascinating case of Fort Knox in the United States, one of the world's most famous gold depositories. Despite numerous conspiracy theories and a lack of public access, Fort Knox holds a substantial portion of the U.S. gold reserves, symbolizing national security and economic strength. The secrecy and security measures surrounding Fort Knox have only added to its mystique and importance in geopolitical strategy. Technological and industrial uses of gold. Beyond its financial and geopolitical significance, gold has numerous industrial and technological applications. Its excellent conductivity and resistance to corrosion make it ideal for use in electronics, including smartphones, computers, and other high-tech devices. Gold is also used in medical applications, such as dental fillings, cancer treatments, and diagnostic equipment. In recent years, advancements in nanotechnology have unlocked new uses for gold. Gold nanoparticles are used in various medical and environmental applications, including targeted drug delivery systems, cancer treatments, and pollution control. These technological innovations continue to expand the value of gold beyond its traditional roles. Environmental and ethical considerations. While gold's value and utility are undeniable, its extraction and production have significant environmental and ethical implications. Gold mining is associated with environmental degradation, including deforestation, soil erosion, and water contamination. Mercury and cyanide, commonly used in gold extraction, pose severe risks to ecosystems and human health. Moreover, gold mining often occurs in regions with poor labor practices and human rights abuses. Artisanal and small-scale gold mining, in particular, is plagued by child labor, hazardous working conditions, and exploitation. Addressing these issues requires responsible sourcing practices and international cooperation to ensure that gold mining benefits local communities and minimizes environmental harm. The future of gold. As we look to the future, gold's role in the global economy remains as significant as ever. Digital currencies and blockchain technology are transforming financial systems, yet gold retains its status as a trusted store of value. In an increasingly uncertain world, gold provides a tangible asset that transcends borders and generations. Investors continue to seek gold as a hedge against inflation, currency devaluation, and geopolitical instability. Central banks' continued accumulation of gold reserves underscores its enduring importance. Additionally, technological advancements will likely uncover new applications for gold, further enhancing its value. From ancient civilizations to modern economies, gold has shaped our world in profound ways. Its true value extends beyond wealth and beauty, influencing economic policies, geopolitical power, and technological innovations. Thank you for joining us on this journey through gold's fascinating history. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to our channel for more captivating stories and insights.